Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 6th of September. We have a shorter trading week ahead of us, which starts with slow economic calendar on Monday due to US markets closure for Labor Day holiday. Moving on Tuesday, we should be on lookout for Chinese trade balance data for August, also Reserve Bank of Australia interest rate decision. That will be followed by Eurozone ZEW Economic Sentiment Survey and Eurozone and Japanese GDP Quarter 2 figures. Moving on, Bank of Canada interest rate decision is due and US crude oil inventories will be closely watched on Wednesday. On Thursday, we should be on the lookout for Chinese Consumer Price Index data. ECB interest rate decision and press conference will trigger some volatility across euro currency crosses and European equities. That will be followed by US jobless claims data in the afternoon. The week will finish on Friday with Bank of England monetary policy report and UK GDP July figures. Manufacturing and industrial production data is also due, and in the afternoon we should be on the lookout for Canada unemployment rate. Now, let's take a look at a few markets. Let's start with the Bitcoin. Bitcoin price action is uptrending quite nicely. The current price is creating the structure of higher lows and higher highs, and it's trading above psychologically important 48,560. That was the consolidation range breakout and also a retest of this shorter term rising trend line. As long as that level holds, so we can see a pullback to that level and a rally, or a rally from the current levels and a breakout higher above 50,700, that could trigger the extension to the upside, targeting additional resistances at 52,700, 55,000, possibly even 56,800. Alternatively, if we see a corrective pullback and a loss of 48,560, an end of day close below that level, possibly a retest of that level from underneath as a newly found resistance, that could trigger a deeper pullback targeting additional support at 46,600, possibly even 45,000. German 30 or the DAX index is consolidating sideways. This looks like a coiling price action. We have a sequence of slightly lower highs and we have the sequence of slightly higher lows. This is indicative of an energy buildup which normally precedes an explosive reaction. Key trading level going forward is at 15,840. Initial support to the downside is at 15,730. As long as that level holds and we see a rally from there, break through 15,840, that could open the way for another retest of this falling resistance trend line at 15,970 area. Only a breakout of that level, an end of day close above 15,970 could trigger the extension to the upside, targeting additional resistances towards 16,000, 16,050, 16,080, 16,100, and so on. Alternatively, if we see a corrective pullback and a loss of 15,730, an end of day close below that level, that could trigger corrective pullback lower, targeting additional supports at 15,600, 15,500, possibly even 15,350. Nasdaq, we have a sideways consolidation here in overall uptrending market. So we saw consolidations with the breakout, consolidations with the breakout. This is another consolidation here. Indecision, possibly triggered by weaker non-farm payroll numbers. A little bit of a confusion here. Is it a bad news, good news, or is it a, bad news, really bad news? So key trading level going forward is at 15,570, which is the cluster of these lows here. As long as these levels hold, so we see a pullback and a rally, or we see a rally and a breakout above these current swing highs at 15,670, that could trigger the extension to the upside, targeting new all-time high, 15,800, 15,900, 16,000, and so on. Take your pick. Alternatively, if you see a corrective pullback and a loss of 15,570, possibly a retest of that level from underneath as a newly found resistance, that could trigger deeper corrective pullback, possibly targeting additional support towards the cluster of this previous consolidation at 15,400, 15,340. Now let's talk about euro dollar. Euro dollar had a bullish breakout higher above this falling resistance trend line. This is a counter trend breakout higher triggered by US dollar weakness, recent US dollar weakness. Key trading level going forward is at 1 spot 1830, 1 spot 1850. It's actually a zone of about 20 points, which is that breakout level. So a pullback from the current levels into that zone and a rally from there would be seen as potentially very bullish, or a breakout and an end of day close above 1 spot 19, cluster of these previous highs, and nice round number 1 spot 19. That could trigger the extension to the upside, targeting additional resistances at 1 spot 1950, 1980, possibly even 1 spot 20. Alternatively, if you see a pullback lower and a loss of 1 spot 1830 and end of day close below that level, that could trigger a deeper corrective pullback, targeting additional support initially at 1 spot 18, which is the cluster of these previous highs and moving averages here, possibly even 1 spot 1765 to the downside. Sterling dollar also had a counter trend breakout to the upside. So we have a sequence of lower highs. The price was capped by falling resistance trend line, and then this is the reaction to a recent US dollar weakness. Key trading level going forward is at 1 spot 3820. As long as that level holds, bulls are in charge. Counter trend bulls are in charge. Pullback to that level and a rally, or a breakout above these current swing highs at 1 spot 39. An end of day close above 1 spot 39 could open the way for the extension to the upside, targeting additional resistance towards the cluster of these highs at 1 spot 40, 1 spot 40.35, possibly even towards 1 spot 41. Alternatively, if you see a pullback and a loss of 1 spot 38.20, in the particular 1 spot 38, which would be a more significant round number, that could trigger a deeper corrective pullback, targeting additional support to the downside at 1 spot 37.20. Dollar yen is going sideways. No trend here as such. There is a shorter term intraday kind of rising trend line here, potentially indicative of where the support is, but the overall trend is sideways movement. The longer term picture is pointing to a major resistance at 1 spot 10.50. The longer term picture is pointing to a major support at 109.50, 109 to the downside. So ranging market. Key trading level going forward from the intraday point of view is at 109.80, 110. It's yet again, it's about 20 points zone. Push higher through that level and a breakout could open the way for the retest of 110.50, 110.70. Alternatively, if you see a loss of these current lows and a dip lower towards 109.40, a loss of that level, that could open the way for a deeper corrective pullback. Therefore, continuation of this sideways price movement towards additional support at 109. Let's talk about gold now. Gold had a bullish breakout higher on Friday after those non-farm payroll numbers were reported. US dollar weakness, gold breaking out higher. We also had a bit of a volatility consolidation in US equities, so a little bit of a risk play there as well. But this looks to me like a sideways consolidation breakout in the same way as we had it here in overall uptrending market. We have a sequence of higher lows, higher highs, and the encouraging thing for the bulls is that this key trading level at 1805, apologies, 1805 held. So we can see a pullback to that level and a rally, or a breakout above these current swing highs, which could be indicative of the bullish sentiment, potentially indicating the extension to the upside, continuation of this bullish trend, targeting additional resistances at 1850, 1875, possibly even towards 1890, 1900 over a medium time frame. Alternatively, if we see a corrective pullback and an end of day close below 1805, which would be loss of rising trend line, loss of previous consolidation level, loss of moving averages in end of day time frame as well, that could trigger a deeper corrective pullback to the downside, targeting additional supports at 1790, possibly even 1780 to the downside. Lastly, let's talk about crude oil. Crude oil came to a psychologically important $70 per barrel. We have a sequence of slightly lower highs. This is a major falling resistance trend line, indicating the existence of this trend. But the overall price, recent price, is actually quite bullish. So key trading level is at 70. Bulls require a push higher and an end of day close above 70, which could trigger the extension to the upside, targeting additional resistances at 71.70, 74, possibly even 76.50. Alternatively, if you see a rally and a rejection, or a gradual move lower and a loss of 68 level in particular, that could trigger a deeper corrective pullback towards additional support to the downside at 67. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.